Hello, and welcome to yet another episode of Markets and Nonsense. I'm Chavan, and I'll be the host, and along with me, Rohit Srivastava. Good afternoon, Rohit. You know, how do you see the markets now, considering what is going on between we and Pakistan? Do you think this is going to continue, or markets might fluctuate, or how do you see?
So if the only thing we can do here, having only part of the information of what is really going on or the level of escalation is what is the trade setup,
Mm,
and the trade setup is that Nifty or the other indices could not cross 61 to 66% retracement levels
mm,
of the entire fall of last year,
mm,
and that means that we are still in some corrective territory, not certainly out of the woods. Last time we were talking about the potential ki 5 wave advance milna chahiye, and this can go on, and domestic institutions are long and bullish, which is still true. In fact, yesterday FIs completely cut their short, so they had a end of the day they were long, which is
mm.
slightly different from the domestic institutional position. But every last time where they have cut their shorts and become long to some degree, sometimes a little more than this also, but around I mean anywhere where it crosses the line, and if it is a corrective bounce, then usually you top out over there. So we have those indications, but those are all short to medium term, 4 to 5 weeks. The bigger
Mm,
call is that will this high near 24,600 odd uh, become a lasting top of a bear market, or just a temporary top for a pullback? I think that is the answer that everybody is looking for, and the answer is we don't know, because this is a
very
complicated
interesting.
scenario.
Yeah.
But I'll tell you this, that if I was to take a bet on A, this is only a retracement of the rise, and B, we can fall to a new low, I would bet on B. Then you should ask me the question why. And it has nothing to do with India, Pakistan. The why
Mm,
is it has to do with the US debt situation, because what the FOMC did last night is that they they did nothing basically,
yeah.
and them doing nothing. And some people should go and watch the video I have published in the winter update section of Indiacharts. It's a free video. I've explained the inverted yield curve and how it has worked the last 4 times, and we are in the same situation. And what saved the market from falling in 1994 or in COVID from the same situation was excessive stimulus
Mm,
or unexpected stimulus. Something unexpected was done at a size or scale never seen before. In 1994, it was Alan Greenspan, who then made the Fed famous for markets. And then to 2020, of course, COVID, everybody launched missiles on COVID with monetary madness. So
mm,
we have both those extremes, and neither of this was done yesterday on similar readings in the yield curve. And if neither was done, then the other two outcomes were 2000 and 2008. So I hope that's not the scenario, but even then, it opens up the risk to further weakness from a global perspective, because it means that till you don't get a crisis, the Fed is not going to do anything. So the
mm,
crisis comes first, and then they will act. They will act because they have to save the US from default.
yeah.
But that they are not acting today means they're going to wait for a crisis. And that crisis, what it will look like a big spike in bond yields.
Mm,
So this is my very short overall analysis of the situation. And that is why I would be open to more downside risk than normal. But let's see. Definitely you
okay.
can't be bullish on the current setup with the RMI going into sell
Sell. Yeah. On the daily chart, it's sell. Yeah.
after 61% retracement. So
Correct. But how do you see the GDP numbers of US going into negative? Do you think US actually has officially stepped into recession, or is it because of the tariff thing, excessive buying has happened?
yeah, it is because of the tariff. So heading into recession, the official definition is 2 quarters of negative GDP. And even when that happened in 2022, they didn't confirm it because the NBAER, which finally is the one that announces recession, looks at other data points like unemployment, which didn't happen. This time around, unemployment did cross the edge. That is when the Fed cut rates once in November last year,
Mm.
and citing the what they call the Shom rule or something. Now, after that, the unemployment data has gone flat. So that's what they said yesterday, that the data is flat. Other data points are showing more inflation, so there's no reason to cut rates now. So they're simply going to wait. So what has happened is that yes, it's because of imports. Everybody saw the tariffs coming. They ended up importing early so that they don't have to pay more, and that is then minus from the GDP number, negated. So therefore, the number ends up negative. So if you remove that number, it may not look negative.
Okay. Uh, but also this tariff thing. Okay, there is a rumors going on. That tomorrow there will be an announcement of some trade deal. Either it might be it has got to do with US. Either it is UK or India. I'm not sure, but it has got to do with UK, which is very very positive. Okay, considering what happened, the major fall happened last month because of all these tariff issues. Now things are settling down, slowly and steadily. They've started having this, in fact, India and UK, it's a major announcement of free trade. It's a high boost for both the countries, but all these positives, do you think will it affect and some kind of
So,
positive?
so it's my own tweet one day after the announcement of tariffs was that this is a move towards a global free trade. Okay, this is
Hmm.
not deglobalization. This is reglobalization.
Correct, you
What
told
you have
this.
told me is essentially that, and people didn't want to believe it then,
Hmm.
uh, and that is a huge long-term positive.
Hmm.
How to discount it in the near term is the bigger issue. Long term, having global free trade is a huge positive, and
Yeah.
all you leave behind is a 10% tariff because US needs money, and so they will
Hmm.
leave that 10% tariff and hope that everybody agrees to free trade agreements, and that sort of ends the issue. So it was
Hmm.
nothing more than that. Now, a global free trading environment will mean everybody is going to try and sell more goods and services to everybody else.
Yes.
Uh, the risk in that environment is of dumping. Will you over excessively move into certain markets, and we may or may not like it.
Hmm.
In the short term, it can cause a boom or a boost to economies also, depending
Hmm.
on how fast things move.
Yeah.
So a lot of judgments that I'm trying to make over here. But center to the whole problem is that you have a huge US budget deficit, and in the short term, if bond yields rise and the dollar rises, it still puts pressure on emerging markets. And then you want to export to these emerging markets. So which means that you want them to receive less in terms of currency. So their currencies start to weaken, their borrowing powers come down. So there's a lot of macro movement here, a lot of adjustment, one-time adjustment. I think that all markets will have to make to this new environment, new scenario, and then from there, probably hope to chug along. So what is that adjustment going to look like is what we have to then figure out over the next few months.
Hmm.
So if I just think of that, I'm not able to make sure whether the shock comes first or not, but I would hope so, because that way the worst is behind you and then you have nothing to worry about. So if you get
Hmm.
this bond market shock before the positives from the trade deals show up on our shores, then you'll be starting at a very very good place in terms of markets, in terms of valuations, and you get a good boom ahead. So I would hope for that. And if the Fed is not intervening with liquidity, maybe that is the scenario.
Hmm. Okay, so you mentioned 61.8% twice, Rohit. So you're taking from the tops, right? So top of September, and
26 to
then
100 all the way down to
yeah.
21,700. Yeah.
Are you by chance saying that this is just a B wave and C wave is spending on the downside?
So
Say no.
that is a risk in this environment, especially this escalation wala story. Okay. Now, purely on the US thing, I can't say you will get a C down, because remember that a US slowdown versus a US recession is the debate. If you
Hmm.
only get a US slowdown because US economy is still strong, etc., as per the Fed,
Hmm.
and a lot of research also that people are doing. A lot of research houses say that US economy is still going to grow positively, just at a slower rate. Then you will see what happened in February and also what happened in the last 2 weeks. European stock markets did far better than US stock markets. Okay, India did not at that point of time, but it is capable of being in that boat where more money comes out of US into other markets that do better. So liquidity has to go somewhere, it ends up going to other markets. So this is a US slowdown story. But when you get this kind of escalation, if it goes out of control, then wave C, specifically in India's case, becomes a possibility. And the Elliott wave theory is that wave C is when escalations happen. Not just war, it can be civil also, it can be domestic issues. Some kind of bigger problems happen because wave C means that the social mood of the country has gone bad enough. And when the social mood is bad is when these things occur. And so the same thing applies both to India and probably to Pakistan. Now, I can't see a wave C in Pakistan yet, but they did end a large third wave rally over the last couple of years. And now they are correcting that. So it would be some level of a bear market, not a higher degree. So which is why you would think that, okay, it should not be a major escalation. But as long as there's news flow of firing and planes and things going on, markets can correct. So if this goes on for longer, why can't we go back to a 21,200 at a minimum? But wave C would actually mean going below that. But we can say, okay, truncated wave C, and we can have those arguments. But the chances are that wave C would break the lows if there is. But it's more the other way around, that wave C is when these things happen. So it's the trigger is the C. It's not it's the social mood trigger that, the mood was bad enough that you were willing to go into conflict.
Yeah. In fact, their markets fell by 6%, and they have just shut down the stock exchange for today.
Yeah.
Yeah. So, Rohit, if in case, it's not a C wave, okay, is it like an ending 3 or taking and 4 and then 5? That is when you will actually feel comfortable. I mean, at least you have to see the first 5 waves, isn't it, to
I
feel
think
comfortable?
I'll
Because
have to,
last time also,
I'll have to show you charts to explain this one.
yeah, sure. Because last time also, Rohit, when we started discussing, we were pretty confident that this is going to be Teji, and then the tariff came and everything went for a toss.
Yeah. So
Right?
yeah. So what I'm going to do here, okay, and in fact I would want to I'll take one of my blank layouts, otherwise I'll end up drawing on this one. Okay. See, what you're talking about is whether this rises 5 waves. Now,
No, I'm still talking third, ending 3.
I understand, but for this rise, na?
Yes, absolutely. Ending 3. 3 is
No.
ending.
I'll tell you that it may not be an ending 3. It can also be either 1, 2, 3, 4, and 5 on an hourly chart and then ending. Or if I want to stick to the daily chart, okay, it can also be 1, 2, 3, 4, and this whole thing is 5 from here to here. Okay, because this can be 1, 2, 3, 4 triangle and 5 over here. So there is a chance that we can say this rise was 5 waves. It need not be that it was a 3 wave as appears on the daily chart. But there's an alternate count which fits with some charts, and that is that this is an expanded flat. Okay, we've seen it discussed in our mentorship group also. Some people have asked this in our comment section on Indiacharts, and they're not wrong, because if you remember, now you just step back a few weeks when the Trump tariffs happened. I've published this chart. I've discussed the possibility that whether this was a leading diagonal. We broke the lower end. It doesn't change the idea because E is still shorter than C, and expanded flats after in wave B of leading diagonals are very, very common. I've seen it in stocks. I've not seen it in an index. Okay. So the question really is not whether this rise was 3. Even if it was 5, it can be this. The question is whether this 5 is 1 and we are only going to get a 2. I would say let's keep all the odds open, because see, even if it's only a 2, that means this escalation will not be serious. all you will get is either a pullback to the 20 DMA, or you will get a B, C kind of a correction closer to 50 or 60% retracement. And then from there, you will start a third wave.
Okay.
This still keeps some downside open in the near term.
Yeah.
Okay. But given that the situation is escalating, if you are on the right side of the short term, and if things get worse, you should be prepared for that. So do have some hedges in place if you're in a portfolio. Do manage that better, that such downside risk doesn't hurt you too much. So that's what I'm scared about, because I don't know how far this is going to go.
And if it is wave C, we are looking at 19,000, 18,000. It has to go below A, right?
Yeah. So C, even the minimum A equal to C would end up at, I think, 20 something.
Yeah. But nothing is confirmed, Rohit. I mean, we are in a no trading zone, you're saying? I mean, there's no clarity as such right now whether which way the market is going to go, considering the geopolitical situation, what is happening. But once
Yeah,
you
I
see the
mean, if
Hmm,
the Pakistani market is right, see, why did it fall 7%? That means at the domestic level they must have said something about escalation. Till yesterday, even they were not falling that much, so we were all at peace. So that is your first sign that something more is going to happen. Now it's just a question of how far it goes. Yeah. Sorry, go on. What you were saying? What is your question?
no, I mean, if it is wave C, we are looking at 20,000, right? That is what
Yeah.
I want to ask
Yeah,
you. Okay.
2243 is equality.
Okay.
But let me just spill the beans over here for people who are not subscribers and who don't understand Elliott wave analysis. If this is a leading diagonal and this is wave C, okay, the argument should be, is this a leading diagonal? I have not seen wave C of a leading diagonal ever end at equality. It always extends more than 90% of the time. There's only one exception I remember, and that is not good news. If this is wave C, it based on history of leading diagonals will not stop at 20,200. Now I've scared people enough why they should be hedged in this scenario. So the complacent view today is that all is good, tariff deals are taking place, China is willing to talk, okay, everything will work out, and let's stay invested. But this part is never considered that social mood is bad enough for something more worse to happen. So let's see how it unfolds. I'm just saying be prepared.
Yeah.
If it doesn't happen, great, but to be not prepared and then it happen is worse.
So
I mean, just
interesting.
look at today, how most indices which were in, there were some indices which were in green in the morning. Now almost all more are in red than green. Only 4 are left. I think the odd one is here, sugar. I don't know why it's up. IT, because of maybe global markets have not fallen much, or as you were telling me earlier, it's a UK deal. Yeah.
Absolutely.
So in private banks, oddly, holding out. But in all of these charts, so just for very short term traders, I'll just show something. In all of these charts, what is happening is, if I just draw a trend line, these trend lines are not getting crossed. In some cases, it is touching that and coming off. So in, like, say, for example, the 500 or mid cap, I think it was mid cap index just touched that. So when we go to the hourly chart, you see initially we draw a triangle like this. But then if I stretch it here, it becomes more like this. Okay, and now this last rise has ended up being 3 waves, A, B, C, and then fallen. So that is a sign that this was a correct. So instead of triangle like this, it can become triangle like this, A, B, C, D, E, and now actually it is starting to fall. Okay, so slightly different even in small cap index if I draw it like this. So same thing in Bank Nifty also, if I redraw, but it didn't touch that line, I think. If I redraw it, it's much lower. So maybe not like that exactly. But in private bank indexes, what we were looking at, we saw that line almost getting quite close, but it's still a little away. But till we don't cross that, we are still with a downward bias.
Yeah. Okay. All right. So people over here can start asking the questions. Put in the comments. We'll take up. By the way, Rohit, the good news is strike is on now 1 minute update.
Oh, it's
Most of
fantastic
them,
news.
yeah, yeah. I mean, today itself we have gone live. So those who have not started using strike still, go to web.strike.money and start using. We were on 5 minutes update. Every 5 minutes it used to update. Now it is a like 1 minute snapshot. Every minute it will keep on updating, and only scanners is left out to be moved to 1 minute.
So what we
Every,
should what we should mention, this is real time 1 minute feed now. Okay.
yeah,
So when we
yes,
say real time 1 minute feed means it's real time picking up every minute. So
yep.
it's updating really quickly. I saw that
Mm,
people who were using this 2 days ago, and some of those who felt some frustration with the delays, it's sort of, I think my experience today has been pretty good. Everything
mm,
is opening pretty quickly, and the prices change without you really having to think about it.
yep.
So that's a brilliant, big move forward for the platform.
Yeah,
And I encourage everybody to get back and start using it.
yeah. Absolutely. Only scanners is left out, Rohit, which scanners and diffusion sentiment. And
Okay.
RRG is going live this week.
I thought scanners you mentioned in the WhatsApp that it was done today.
No, that is the price and volume scanners. I mean,
Okay.
RMI, downtrend, and all, it is yet to be moved, which will
Okay.
be doing it right now. So,
Yeah.
anyways, and
That's
yeah, sorry.
it.
Yeah, heat map also is on 1 minute. Only the price related. The
Got it.
indicator related, it's yet to be moved. We'll be
Yeah.
doing it very shortly. So, this is the great update. So, those, you know, who have not yet used, or who are using, this is the update. We have gone to
In
one
fact,
minute
even if people
strike.
were having trouble with heat maps, it's pretty much sorted. It's opening
Yeah,
immediately, which
absolutely.
was a lag that was there for quite some time. So
Yes.
sorry for that pain, but it's all up and running. So
Yeah. Difficult. It was very difficult phase for me personally. But yeah, our developers have done a fantastic job, but still long way to go. Uh, a lot of modules is yet to come, and
and are
we'll look
coming
at,
in the next 1 month, right, Chavan?
yeah, yeah. All the things will move to 1 month, and then the big sector analysis is going to start development. We are going to start development with the sector analysis.
Yeah.
So here's the update on strike, and of course, one more announcement is the mentorship program. We have started the mentorship program. Those who are interested can, you know, can inquire, can go to Indiacharts.com and just see the mentorship program details, and get in touch with us. So Rohit, any ending statements? Not much questions from the viewers. Any ending statements?
Yeah, I guess people are just tired. So
Eh, yeah.
there's a question I see on gold, sir. Your view on US indices and gold.
Hmm.
So gold, so there's this huge inversion, right? So I spoke about the bond market, and if he didn't hear me, what I said is that the dollar, which has been falling for this entire period on the back of tariff news, may be close to a near-term bottom. And if that turns out to be true, even yesterday after it was down, the dollar index is up a little bit. If you do see the dollar recover, in fact, I think even USD INR will start recovering from here. You will see gold prices or commodity prices in general, let's say, come down.
Hmm.
Of course, most commodities have not played out. Only some have rallied, like copper, and that also not back to the highs. But a rising dollar again puts pressure on that entire story. So unless we get this bond thing sorted, rising dollar will result in a weaker gold. The funny thing today is gold is off. Bitcoin is breaking past 61%. Okay. So for a long time, people had started thinking Bitcoin is behaving like gold with the dollar, etc. Now that correlation over the last 6-9 months has broken, where it's become positively correlated to the dollar. So I really wonder if BTC will now do its own thing and outperform gold. So that's my view. Surprise news for other people that BTC, that whole outperformance of gold to BTC, which they were seeing, is now going to reverse in a difficult market environment where safe haven will appear to be BTC and rising dollar will hurt gold. Let's see if this turns out to be true, but that's my view.
Okay. Uh, okay. Can the global indices be included in this platform? Definitely, Pallavi. We are looking into adding more and more data into this, but it will take some time. Right now, our focus is to just shift the platform to 1 minute, and then Yeah. Okay. Jayant is asking, what is the best hedging strategy for long-term portfolio investors in this market? You mentioned about hedging, right? I mean, what is the
So
best strategy?
one way a lot of the global hedge funds and all do it is deep out of the money puts, long dated. Okay, you can't do short dated deep out, but long dated means like if you get a 6 month or something. I think June or December type contracts are usually active in index. So doing an out of the money where it costs very less can be a good way of doing that. If you're only using index futures, a lot of people have not had great success with it, but reason could be that they don't usually check the beta of their portfolio. So if your portfolio has a high beta, say it's a 2 times beta, okay, then you probably need a 2 times index position against your portfolio to really hedge it. So if you don't have a good assessment of the beta of your portfolio, then your hedge might not be right. So the hedge should be equivalent to the beta of your portfolio in futures, index futures.
Okay. With this, we are almost up there. Thank you so much, Rohit. Uh, we'll meet up again next week.
Surely.
Again, to all viewers, go to Strike and start using it. It's real-time data now. So we look forward to see you there. Thank you so much. Till then, till next week. Take care. Bye bye. Thanks, Rohit.
Thank you. Goodbye.